All right, guys, good morning. Happy Saturday. I appreciate you guys getting on here. We're going to go over mortgage protection / internet life leads. So if you don't have your pens and paper out, now is the time for sure to get that out. We're going to go over the different types of clients, how to write with them. We're going to also go over the financial inventory, and we're going to go over the basics for the in-home. Okay, so I'm hoping to make this as as simple as possible, but I want to make sure that we fully go through it. So when you get into the home, we want to make sure that you're setting expectations with your clients. Okay, so every home that I go into, I'm going to make sure they know and I know why I'm there. So when I walk in, regardless if this is mortgage protection or if this is an internet life lead, what I'm going to do is I'm going to say, okay, so you're looking for help with your mortgage protection, correct? Or you're looking for help with life insurance, is that right? Because I don't want to go through my entire appointment or go through my intro and then say, oh, I thought that this was health insurance, or I thought that this was this. It happens. So now I have specifically told them, so you're looking for help with your mortgage protection, correct? There's no confusion, right? I'm going to tell them who I am. So I'm going to say, okay, perfect, Mary. So I'm going to make sure I help you with that. So what I want to make sure that you know is who I am. So again, I'm Jessica. I run here locally for the area. What I do is I just make sure that you're you, that no one's trying to take anything out in your name. I'm just going to ask you a couple questions. That way I can, figure out what you qualify for. I'm licensed here through the state. My state license number is right here. You can always look me up on the Washington State Insurance Commissioners, just so you know that I'm a real person, that I'm really here to help you. Okay. I do a lot of different types of insurance, right? Our next one right here is specialized. This is where I'm going to tell them what I do. So I'm here for mortgage protection, or I'm here for life insurance, but that's not all that I do. And I want you to know what I do, because when I sit down and help you, this is not usually the last time I'm going to help you. I will help you along through life. I will help anybody that you know that needs help also. So your family, anybody that needs that support and doesn't know where to go, I'm going to be there to help you. So I'm here for mortgage protection. What I specialize in is also traditional life insurance, final expense coverage, Medicare, and retirement income planning, like wealth preservation. So for someone who's in the accumulation phase for their retirement, we have strategies that can help them maximize their portfolio. And also for someone who's worked their entire lives to make sure that they've saved enough money for retirement, I help people to that way they can still have growth but safety within their retirement. Now there might be something along the way that we need to talk about, but right now I'm here to make sure that we take care of your mortgage protection or your life insurance. My role is just to see you, ask a couple questions, right? So now I'm going into my role. I'm just going to make sure that I find something for you that you qualify for and that makes sense. So again, my process is I'm going to ask a couple questions so I can make sure that whatever we put in place for you, you qualify for. I'm going to make sure that it's affordable, because it makes no sense, Bob, for us to put in place coverage today that in 3 months you call me because your car breaks down and now we're getting rid of this. Because families that I help, they don't look at this like a bill. They look at this as they're investing into their family. They're protecting their family. So we want to make sure that today, tomorrow, a year, 5 years from now, that you don't think twice about this. Let's see. Everybody mute yourself, please. Okay. It's not letting me, so I need you guys to mute yourself. Thank you. I'm also going to make sure that you understand this. I can't tell you how many times that I go into a home and I ask somebody what they have and they have no idea. I'm going to make sure that when I leave here that you know exactly what you have. I'm going to make sure that you know exactly what you have, so that way when your daughter or your parents or whoever is saying, what is that? And they're questioning, you know, did you have, was there a scam or something, that you know you're in the best situation possible. And then you can help your family or your friends get into something like this also to protect them. Now we're going to submit. I don't do the approvals, Bob. I'm sure I'm not the insurance company, right? I'm kind of the eyes and the ears for them. So what's going to happen is once we go through that process and I ask my couple questions, I'm going to find something for you that you qualify for, that's affordable and that you understand. Then I have to submit a request to the insurance company, because I want to secure your insurability with that company. So what that means for you is that I'm going to submit it to them. So I'm going to ask you, once we're done with this, I'm going to ask your ID. I'm going to ask you a couple more questions. I'm going to ask you your banking, whoever your beneficiary is, and we're going to submit it to that insurance company. Now, if we get an approval, which is what my goal is, they're going to approve your policy. They're going to issue it, which means you're approved that day. They're going to draft your account, which means your first payment comes out, which is a really good thing, because that means now we've secured your insurability. That usually happens about 24 to 48 hours after your policy is issued, which is great because, again, there's no medical exams or anything. I just have to ask those couple questions, and I'm the only person that you're going to deal with, right? There's nobody's going to come out and draw your blood. Nobody's going to come out and make you pee in a cup or anything like that. I'm going to be the one to help you. Okay, mute out. Then what I tell them is, if they come back and they tell me no, that's okay, because as I forgot to mention up top, you guys, I always tell them I'm a broker. Okay, I'm gonna go back for a second, right? We're human. This is how, even if here's the example right here is, I might not follow these steps exactly, but these are my steps for any in-home, setting my expectations. So if I forget something, that's okay. You just have to have bulleted, maybe a little note for yourself of your bulleted things that you say in your home. Okay, so I tell them I'm a broker. I've got 16 different A-rated insurance companies that I go through. They're all A-rated through AM Best, which that means for you is almost like the Better Business Bureau for insurance companies, is that there's no Joe Schmo insurance company. These are A-rated companies that are going to protect your family. They can't hike up their costs. They aren't shady. They're going to do exactly what they say they're going to do. There's no hidden little line of anything. And I'm here to make sure that we do that we protect your family and that we protect you. I wouldn't put you into something that I wouldn't put my own family in. And most of these companies, I have somebody that I know or that I've put them in there. Now, if they come back and they tell me no, so I'm going down my pivot, that's okay. That's why I'm a broker. So if they come back and tell me no, I'm just going to go to somebody else. Now, I'm pretty good about what I do. I've gotten really good at this, so I usually don't have to pivot, go to 5 or 6 different insurance companies. But if I have to, I will, because my commitment to you is that I'm going to help find protection for your family. Okay. Now, can I continue? Is this something that I can continue with? Now, I haven't talked about price. I haven't talked about any specifics. I set my expectations, which typically takes me about 3 minutes. So either I have the expectations have been set, right? So now they know what's going to happen. They know that this is life insurance or mortgage protection. They know I'm going to ask them their questions. They know I'm going to ask them about their banking. They know that this is going to cost something, all those things. There's no confusion, right? There's no confusion as to why I'm here, what my role is, what I'm going to do. So I'm going to say, can I continue? Can I ask you my few questions? Now, either if they tell me, no, this isn't what I wanted, that's perfect. That's fine. No worries. I just want you to understand, I'm not here to bug you. I respect your time. I have a lot of families I do have to help. So I'm gonna go, and then I'm gonna go dial, or I'm gonna go door knock, right? Or I'm gonna go through to my appointment. Okay, so that's setting the expectations for every home. You can do this in every single home. Final expense, mortgage protection, life insurance, you name it. This is the setting the expectations that I do in every single home. Okay? Because when I don't want to get to the banking portion and then go, why do you need my banking? Because I've already told them. And it doesn't mean I don't get people that say that, right? Sometimes people will say, well, why do you need my banking? Remember, what they're going to do is I'm submitting a packet to the insurance company, and I'll spin my tablet around. I'll say, see all these green check marks right here? What these do is that I'm getting a packet together. If I had a paper packet, which I don't do, I like to go through the secure site of the insurance companies. This is us saying, I think I qualify. I want protection in place. This is what it is, and I want to have this protection, right? I can't give them a half packet. So what we'll do is we go ahead and we just submit that, and then I just go through and I keep going, right? When you do it this way, when you ask somebody what their social is, they won't flinch, right? They won't flinch at all. It's what's that social again? Not like that, oh gosh, I might ask their social and they're going to think that I'm like trying to scam them. Okay. So setting expectations. All right. Now, once they've said that they're going to continue, we have our financial inventory sheet. Okay. Yours might look a little bit different. That's okay. This one is on the 101 orientation, also in the forms document. I'm going to make sure and post all these afterwards. But these are broken up. So what we did was I broke it up. You see the different colors, right? There's green, there's blue, there's purple, and there's red. Now, I'm very specific on how I go about this financial inventory. This financial inventory is not here to just randomly put in things. It's intentional. The more in depth you are with your financial inventory, the better ammunition and the better picture that you have to help protect this family. I love financial inventories because I walk into a home and I can ask questions and then I can see where they really need the help, things that they've never thought about before. So let's go into it. Okay, so first was the green. The green is finding out their why. This is so important. This is my main thing. If I don't have a why, I'm not going to go to my other parts until I get a why. I don't care if someone says, I just want the numbers. I'm not giving them to them. I'm not going to give them numbers until I know what their why is. So on the top, it says your 3 objectives, right? I've already talked about this. I'm going to make sure it's affordable, it's comfortable, and I'm going to make sure you qualify. Now it says your beneficiary. Now the beneficiary is actually, like we said, if I go back over here, the beneficiary is down, right? It's down lower, but that's that's the first thing you should ask. Right? Who is this going to be for? Why did you fill this out? Can you tell me why you filled this out? Why is this important to you? Right? What would happen if you don't have this? You know, what's your plan? You know, okay, so say you're sitting down with a couple, right? What's your plan if something happened to you, Mary? Bob, are you going to sell the house or are you going to rent? What are you going to do? Because I need to know what their plan is. Because how can I help somebody if I don't know what their plan is? If I don't know that this is a family home and Mary wants to keep this house, now I know how to protect her. But let's just say she said, oh no, I'm going to sell this house. Well, then we're not looking at a full mortgage protection because we're looking to protect the equity in the home. You won't know this unless you ask them, what's the plan with the house? Are you going to move? Are you going to rent? Are you going to sell? Or do you just need time to figure it out? You know, a lot of times when someone is looking for life insurance or mortgage protection, they've either had a recent death with the pandemic going on. That's been a huge thing, you know, and finding out. So if someone did have a recent death, digging a little bit deeper, did they have any insurance? What did that look like? Or did they not? And what did that look like? I like to say things like, I can understand, you know, most people in your situation, is exactly why I'm here, right? I'm edifying them. I know you don't want to be a GoFundMe legacy, right? You want to make sure that you take care of everything. You want to make sure and protect your wife, right? You want to protect your children. You want to make sure that your brother's not financially burdened. Whatever it is, we want to find out their why and we want to find out the who. So I'm asking, where do they live? Where does your daughter live? Does she, you know, how is she doing financially? Where does she live? Does she work? You know, what would this do? Could she be able to take time off work to take care of all this stuff? You're really digging to why, right? Because when they filled this out, they had a reason. They had some emotion, but all that time's gone by, right? So you need to bring them back to that. You need to bring them back to why you are here, okay? Next that we go through is you want to do the blue, which is your fact finding, okay? This is your fact finding. This is how you can figure out how you're going to help your clients. Okay, so when I ask numbers, it's ballpark. Like I don't want people to feel like I'm invasive, right? So I'll say ballpark, you know, what kind of income do you have coming in? Monthly, ballpark. You know, I don't need to the dollar. Some clients will give you to the dollar. I want to ask them, how much do you owe on your home? Even if it's a life insurance appointment, make sure you mute out, please. Even if it's a life insurance, I'm going to ask them, are you guys renting or do you guys own the home? How much do you owe on the home? If you went to sell your home, how much is it worth? How much are your mortgage payments? Do you make extra payments towards your home? Because what I'm trying to do is find premium. I want to know how much they're paying. Are they planning to pay extra? Did they just refinance? If they just refinanced, make sure you mute out, please. If they just refinanced, then either they've saved money, because a lot of times their mortgage may have gone down. Well, now we have a little bit of premium that we can work with, right? I wouldn't know that Bob just saved $150 a month by refinancing his house. So when he tells me that he doesn't have any money, I could say, well, you know, Bob, I know that you just recently refinanced. You were able to free up some of that money. Now we can make sure that we invest it into something that's going to protect your wife or protect your daughter, right? Also, how much money do you put into savings each month? Even if someone says none, I say, is that because you don't want to or because you can't? I want to know why, right? I want to find out, do you have any life insurance? Now, outside of work insurance, do you have any life insurance that you own? You know, work insurance is fantastic, but most people that I sit with, it's like renting a car, right? You don't want to rent, you want to own your car. So do you have any life insurance or anything that acts like life insurance that's transferable upon your death? This is the golden question, right? I'm gonna say it again. You should ask this in every single home. It doesn't matter where. Brian Rollins found a massive annuity in a little mobile home that was like a hoarder's house. I found a $300,000 annuity opportunity in the sticks in a little house where a guy that I wouldn't even think could afford a $30 a month policy. It doesn't matter. Don't judge. Always ask, well, do you have anything, any life insurance or anything that acts like life insurance that is transferable upon your death, like a 401k, an IRA, stocks, CDs, any significant savings that your family can use? Is there anything that they have? If they say yes, I say great. And what is that? Oh, it's a 401k. Okay, perfect. Ballpark, what do you have in that? Are you still contributing? Perfect. Okay, great. I'm fact finding. And I'll say that might be something we'll talk about later, but we're gonna, you know, we're gonna keep going. Or I'm not gonna address it. If someone tells me they have $1 million sitting in a 401k, I'm gonna have the same case.
No, fair. Don't be crying, baby.
Hey, Jenny, I think it's Jenny. Can you mute, please?
I'm sorry.
Thank you so much. Sorry, I can't do it when I'm doing this thing. So I appreciate you guys. Thank you so much. Okay, so I'm making sure that I am asking the question, but I'm not going like, oh, let's talk about this. I'm not gonna go off track, right? I'm gonna make sure that I'm staying on track with what I'm there for. Then we'll readjust later. We'll circle back. Because remember, in the beginning of my intro, I already told them what I specialize in, right? I already told them I specialize in mortgage protection, traditional life insurance, final expense, retirement income planning, wealth preservation, and Medicare. And some of those we might talk about later, but today, right now, we're going to take care of what I'm here for. So when I come back later, it's not weird. right? They're like, dude, Nick, you're my life insurance person. Why are you talking to me about my 401k? Like I already told you, that's what I specialize in, right? Regardless, I don't care if you don't know anything about it. There's a lot of people that do. Just that's what you specialize in. That's what we offer, right? We're learning as we go. Okay, so I kind of talked about this. Couple key things for mortgage protection. I know my face is cut off, but I really wanted to make sure I really talked about was the equity. That's what you really want to hone in on for mortgage protection, okay, is the equity in the home. I don't care if they have only 40,000 of equity in the home because it just started. What I say is, okay, so you owe 100,000 on your home. If you went out to sell it tomorrow, ballpark, what do you think that you would be able to sell it for? And they say 250,000. So I'm going to write really big and I'm going to circle it, 150,000 of equity. And I'm like, perfect. Now, when I sit down for mortgage protection, most people, one of the most important things that they want to do is they want to make sure that they protect the equity in their home, because what they feel is that it's like a bag of money in the basement or in the floorboards of your home. And you want to make sure that when something happens to you, that your wife or your daughter has access to that equity, so the bank doesn't come and take over the home, or you're forced to sell the home for pennies on the dollar. We're going to make sure that no matter what we put in place today, that we protect the equity on the home. And I'll make a really big deal about the equity. I don't care if it's little, because even if it's little, what I'm going to tell them is, you know, right now we've got about 50 grand, which is huge. I mean, do you have 50 grand sitting in your bank accounts right now? No. Is your daughter? No. And it's going to keep getting better, right? We want to make sure that, and I'm assuming I'm here because we don't want to be forced to sell the home when market's low and be forced to sell low. Now we're going to go into the next one. Okay, so I've set this up. Actually, I'm sorry, I'm going to go right back. I forgot something that I wanted to mention to you guys. I'm sorry. So the next one down is about their income. Okay, so what I need to know is, what do you do for a living? Okay, you work as an engineer. Perfect. You know, are you planning to retire from there? What's your plan? How much do you make a month? I want to see what you say, well, net or gross. Like, what do you see at your, what comes home to you? What do you guys get monthly? You know, I don't care what Uncle Sam gets. I want to know what you guys see. That's what I want to know, what you live off of. I want to paint a picture. I'm going to get down to the nitty gritty. Okay, so you get, you know, you get your retirement, right? Okay, roughly what do you get with that? I want to know where each of the funds come from. I don't want to say, oh, I get 5,000 a month. What I want to know is how much comes from your retirement, how much comes from this occupation, how much comes from that. So say if they're getting retirement, I'm going to ask them, do you have survivorship benefits on that? And they say yes, or they say no. They will know if they do. And I'll say, perfect. So survivorship benefits is that either the whole amount of their retirement or a portion of their retirement will go to their family or to their significant other. So if we're referencing for a couple, I want to know if Bob makes $1,000 a month for Social Security and he's got $3,000 a month coming in from a job, and he's got another $2,000 a month coming from a retirement account, I want to know what's going to happen. So I know that when he passes away, his wife is looking at there's no survivorship benefits. She's looking at a $5,000 a month income loss. I want to know what happens. What happens if Bob didn't come home yesterday? What kind of income loss are we looking at for your family? And then I'll say, are you going to be able to stay in the home? I already know the answer. They'll say, no, I can't. Well, okay. I know, I just want to make sure that's why I'm here, right? Because I know that you don't have any life insurance. We know you don't have anything in place. I know why I'm here now. I understand why I'm here. This makes sense. Okay, this makes sense. I'm edifying myself and edifying what I'm doing because I'm here. I understand now, okay? Now this is going into the medical stuff, right? This is really important. This is going to help you to figure out what you can put in place, what they actually qualify for, right? I haven't talked about products. I haven't talked about any of this stuff, right? A lot of the questions are, have you ever? On the bottom, it says medical conditions. Have you ever had a heart attack, stroke, TIA? If someone says TIA, what is that? I'll say, well, if you don't know what it is, you probably haven't had it. It's basically like a mini stroke. Have you ever had cancer? Have you ever had diabetes? Now, if they say yes, I'm going to ask them questions like, how are they treating you? Have you ever had complications with your diabetes, right? I need to know, mute out please. I need to know what have they ever had, okay? Do you have a history of, not a family, but I want to know what for them, but I also want to know what their family history is like. So if somebody has had, 4 family members have had cancer, well then, okay, it's common or likely that you're probably going to end up having cancer or something. So that maybe the living benefits might make sense for them. I want to know how long Bob's wife, or not wife, but his mom, his dad, his uncle, I want to know if they're still alive. I want to know what the longevity is in their family. Build chart. That's a big one. You need to know what their height and their weight is. If they're not proportionate, they might be really healthy, but they might be disproportionate for their build chart, and then they're going to not qualify. You don't want somebody to get denied because of a couple pounds. Like I had somebody get denied because of a one or 2 pounds because I just wasn't paying attention and I could have gone somewhere else, right? Getting their height and their weight. I want to know what medications they're on, but also what medications they've been prescribed in the last 5 years. Remember, these are simplified issue. So they might only be taking a lisinopril, but what were you taking? What did your doctor prescribe you in the last 5 years? Okay, anything that maybe they prescribed you that you didn't like, prescribed you that you decided not to take, or they changed it. I want to know what they did prescribe you, and I want details. Okay, so like I said, the diabetes. Yes, I have diabetes. How old were you when you were diagnosed? When were you, how did they treat you? Did you have complications? Okay, the COPD or the asthma. If you ever had to use oxygen? Those type of things are important to know, because you don't have to know everything in the beginning, right? But when you call somebody and you ask them for help, or you're saying you want a second opinion, these are what you can do. You now have the tool to where you can call me and say, hi Jessica, I just wanted to reach out to you and I just wanted to get a second opinion. I have a good idea of where I want to go. Maybe you don't, that's okay. I'm sitting down with Mary, she's got this, she's got this. Like, you have everything that you need for somebody to help you, right? And you also know if you have to do risk assessments and call the carriers, that you have the information you need to be able to help your client and find them coverage. The worst thing is when you get through the whole thing and now you can't get them an approval because you didn't do a thorough job in asking for health stuff. Okay, do you have a history of, how is your family in the last 5 years? Those are the type of questions that you need to ask. Okay, so I kind of went in on that. Now, once I've gone through, I'm going to go back for a second. Once I've gone through and I have figured out what they qualify for, right? So I am very big. This is where I do things a little differently. Okay. Now, I am all about educating my clients. Okay. Because I want to make sure that I'm their last stop. Okay. I want to make sure that they fully understand what their options are, so that way they are not going to want to look around for different options. I want to make sure they know all their options. Okay, so these are in Telegram. They are in a couple different spots in the form section of in-home, and also I believe in the orientation. I will make sure that these are, we can post where they're at. So I made these, you can, they're a lot easier to see once you look at them. So here's what I do. I figure out what they qualify for. And I have this sheet laminated and I pull it out and I say, okay, perfect. So what I want to do is I want to make sure that before we get into coverage amounts, I want to make sure that you understand all of your mortgage protection options, okay? I wouldn't be very good at what I did if I just was telling you, you need this and you need that, right? So I want you to make sure that you understand what your mortgage protection options are. So they're going to be looking at this and I'm going to say, okay, Mary, you're really healthy. So we're going to ignore the purple one. Okay. The purple one is for somebody who's not very healthy. What we're going to look at is these 3 over here. So I'm going to say the blue one right here is traditional mortgage protection, right? This is what the banks used to offer. They don't anymore. What these do is protect in the event of an accident. They're the most affordable. I believe everybody should have that. So the very bare minimum today, we're going to make sure we put this in place for you. Some people want to put other ones, which most people do, but I want to make sure that you understand all of your options and what there is out there for you. So these ones, the traditional mortgage protection protects you in the event of an accident. We can do it for both you and your spouse. These are level premiums, so they never go up on you. And since you're under the age of 50, they have it in a return of premium. Now, the next one is the living benefits mortgage protection. And I say this is what, depending upon your state, you guys, okay, right? So it depends upon your state. So like for our state, we have living benefits of critical, chronic, and terminal illness. So I tell people, I said, this is living benefits mortgage protection. This puts in place a death benefit. It has level premiums. And because of our state, we have the ability to have living benefits, which protects against critical, chronic, and terminal illness. So what that means is that if you got cancer, if you had a heart attack, if you had a stroke, if you couldn't perform 2 of your 6 daily living activities, like say you got in the accident, but it didn't kill you, but you need ramp, you need assistance, this is where you can access a portion of your mortgage protection to make sure that you protect your family, because right now you're working, right? You are the income earner. And if something happens to you, now we're at the risk of not being able to make our mortgage payments. We want to have mortgage protection. There are options within this to have return of premium, which basically means that you get all of your money back at the end. Some people utilize this to help if they were paying off their house early. They like to allocate towards this and be able to still have the protection, but pay off their home early. It does make it more expensive. It's just a matter of what's important to you. This pays additional if you have an accident. The next one over, the green one, is standard mortgage protection. So this is, it's kind of in between the traditional and then the living benefits. This doesn't have any living benefits, but it will pay out to you if you pass away in a health or any type of related death. Again, these are all level premiums, so you don't have to worry that the cost is going to go up on you. This one does have return of premium rider as well. So those are the different options. And like I said, you're healthy, so we're not going to worry about the purple one, okay? Now let's just say that they were not healthy, okay? So then when I show them, I'm going to say, okay, based off of your health, the 2 options that you are going to be able to qualify for are the blue one and the purple one. And so I'm going to go and I'm going to explain the purple one to you guys. Okay, so critical time mortgage protection. This is for somebody who is not going to qualify for a term coverage, or that they're not going to be able to, it's usually more like a whole life. So I'm going to say this is going to be permanent coverage. This is a matter of when something happens, that this is going to be there to help protect the equity in the home. And I explained this is, again, level premiums. It's coverage until the age of 120. So as long as you're not planning on living past 120, it's going to be permanent options for you. It's tax, again, these are all tax-free, free from probate. The main thing on this is it's going to provide time to make sure that we can protect the mortgage and protect the equity in the home. This is what I use. It's basically the exact same. I have another one that is understanding your life insurance options that I use for any of my life policies, okay? So this is basically the exact same, except for I have added in Index Universal Life, and I've changed the title of them. So term living benefits, term coverage, Index Universal Life, whole life, and term accidental, because I want them to understand what options that they have, so that way I'm educating them. They feel in control of what they're putting in place for their family, and I'm here to advocate for them and to give my professional recommendation. But what I don't want to do is just go in and say, you need this and this is why. If somebody doesn't understand and you're not leading somebody to where they're trying to go or where they are going, it's going to be very hard to get somebody to move. They're going to be like, this is where you're going to get, I need to shop around. I want to know my options. Well, I've told you all your options. We've gone over all of your options. Again, I would advise you to either create something like this of your own or to use this one. I've laminated it, and so I can wipe it down in between my appointments, and I can use these to help educate my clients, okay? So I gave a scenario, okay? Here's my scenario. I have a 42-year-old male that's a non-smoker, owes $300,000 on his home, okay? He's the sole income earner. His income is $7,200 a month. He's got a $1,600 mortgage payment. He has minimal debt. He has one car payment. He has 3 kids. He's got $100,000 of equity in the home. The wife wants to stay in the home if he dies. His father died of colon cancer at the age of 62. So again, this is from all of my fact finding, okay? So he owes $300,000 on his home. His wife is not working, right? He's the sole income earner. They've got 3 kids. They've got good equity in their home. So for him, once I've gone through and explained my options, let's say he said, you know, I like the living benefits mortgage protection. Based off of for his budget, because I wanted to make sure it would stay in his budget, what I would show him would be a $200,000 CBO, like HMS CBO policy. Because what that's going to do is going to put $200,000 in life for him. It's going to pay out $300,000 if he has an accidental, because it pays an additional 50% if you have an accident. It gives him all the living benefits, the critical, the chronic, and the terminal illness, which is really important to him because his dad died of colon cancer at the age of 62. We're going to do return of premium for him because he wants to pay off his home early. So we're going to put in place a 25-year because he has a 30-year mortgage. We're protecting the equity, and he's going to have, it's going to be $189 a month, which would fit in his budget. He's going to have at the end of it $56,700 back to help pay off his home 5 years early. So that's going to help save on all the interest that is going to be paying in the next 5 years. That's just a scenario for you guys, right? We can go over a lot of different scenarios. I kind of went through that. What I want us to do is understanding your types of clients, okay? This is understanding, because you're going to sit down with a lot of different people. So this is like your healthy young clients of the family. Okay, I'm going to give you guys ideas of where you would go, what types of things you should be thinking about, okay? You're going to need to understand their why, right? Why are you there? What are they concerned about? Who's the income earner? A lot of times with younger families, somebody is staying home. It's usually the wife. Sometimes, you know, it's a new age. Sometimes it's the husband. But usually someone is staying home with the kids. There's usually one income earner. Do they want to pay their home off early? You need to find out if they have intentions of paying her home off early. If they do, a return of premium, say at a 20 or 25-year return of premium, can be very attractive to somebody who wants to pay their home off early but wants the protection as well. You want to know how much money they put into savings. That's a big thing, right? You want to know, what do they put into savings? What's their plan? And then have they also, so if this is mortgage protection, I like to say, have you guys thought about, I want to know if they've thought about doing life insurance as well. Because what I can do is I can help to drive up the coverage amount to say, let's put in mortgage protection to pay off the home plus give some income supplement. I'm going to help drive up the value. I want to drive up the value of what we're putting in place. When value exceeds price, that's when people move, right? Because they see what it does for them. So for those most type of clients, the options that I would look at would be the Americo HMS CBO, which is the 150, the HMS 125, so both of Americos. John Hancock Vitality. John Hancock Vitality, that's what I do a lot of times for my term, like my mortgage protection, for like standard mortgage protection. The Mutual of Omaha Guaranteed Advantage is my traditional mortgage protection, which is accidental. You do have to have your health license. So if you don't have your health license, I highly recommend that you guys get your health license, because there's been so many times where you can use a traditional mortgage protection as a bridge to be able to protect your family when maybe their budget isn't so great, but this is important to them. You can put in place, say, a $50 accidental policy. Now they have protection. You have a client that now you can go back to in a year and review, and you've still been able to help them and make about $600, give or take some, for your family. So it's a very good option. There's Mutual of Omaha, Term Life Express if they don't qualify for the Americo HMS. But the reason why I really like to lead with Americo is because they're instant right off the bat. So the prescription check comes through right away. Also, they don't offer a return of premium and living benefits. It's one or the other. And when we're trying to build value for those clients, the more things that we can put in for protection, the better. There's other options also, but to keep it simple, right? This is simple. We're trying to keep that. So your younger, unhealthy client, someone who doesn't qualify they don't qualify because of their age for most of our final expense products. They have a health issues and that knock them out for term coverage or prescriptions. They've had drug or alcohol treatments. They have build issues. Maybe they've had a DUI or felony issues. They have a ridiculously low budget. They don't save money, things like that. We can still help them. Okay, that's where that Mutual of Omaha Guaranteed Advantage. They're younger. Maybe they're unhealthy, but not crazy. I mean, it doesn't matter who I say. They say, Bob, I know that you've had some health issues, but you're very healthy outside of that, right? Most people your age, especially with what's going on, distracted drivers, texting and driving, anything. Most people want to make sure that they put in place something to protect them, wait till their budget gets a little bit better, and then we transition them up to something else. So right now what we'll do is we'll put you in place with this as a stepping stone, and then we can transition into to others. There's whole life options through American Amicable, Family Choice, and CFG as well. Looking at lower, so what I like to do with younger clients, because younger clients typically like larger face amounts, is I can stack policies. I could put, say, a smaller whole life policy and buffer it with a larger accidental. Now you've got two policies in the home. Two policies in the home is a client for life, and you're really maximizing their protection and making them feel a lot better when they know that they still have a couple $100,000. Well, they'll make a joke, well, if I'm going to have a heart attack, I might as well make sure that I trip and fall or something beforehand. So now, understanding your healthy single client. This was one that I used to have a really hard time with, because they're healthy, they're single, they're, they don't have kids, they don't have a wife, like what do they care, right? You want to find out who their beneficiary is. You want to get a solid why from them. That's really important. You want to get a solid why. What would they like to, would they ever like to have a family? I work a lot with our clients and that are single, is that, do you have plans? I know you don't have anybody right now, but would you like to have a family? Yeah, I would. Okay, great. Most people that I talk to do, and most people are exactly your situation where they're planning ahead and they're making sure that, because now that you're young and you qualify, we're gonna make sure that you're set up adequately to make sure that when you do have that family, that you don't have to worry about that you've been prepared, right? Are you planning to pay your home off early? The big thing with them is living benefits, right? You're the sole income earner, right? I tell people, I'm like, you're like a walking ATM machine, right? I know it sounds kind of morbid, but you are. If you can't work, you're the only income earner for your house. What's going to happen to your mortgage? What's going to happen to your bills? What if you got cancer or you got sick? What are you going to do? You don't want to depend upon your family, do you? I know our family will, but we don't. Most people that are independent on their own don't want to have that financial burden to their family. And you want to make sure that you protect the equity. The return of premium is usually very attractive to single clients, where they can protect their family, they can protect themselves, and then they get all their money back. So for that, again, it's the Americo HMS, either the CBO. If they don't want the CBO, you could do the 125. John Hancock Vitality with return of premium is a really great option because you can get larger face amounts. They have a lot of health and wellness options, which people they really like that. You can get like a really inexpensive Fitbit or free Fitbit, inexpensive iPhone or iWatch. Sorry, I'm not talking properly. And then the Mutual of Omaha, the accidental with return of premium is a really big one also. It's kind of like the, if something was going to happen, right? You want to think about from all avenues. You don't want to get focused in on one. You want to make sure that you can fully help your clients properly. Understanding your older, healthy couple clients, okay? This is understanding, so this is an older, healthy couple, right? So this is really big. I love these because somebody else is usually there, dependent upon somebody else, right? So you understand their why, you understand who is the main income earner, how much they put in savings, what will be left financially when the spouse dies. You hear this all the time of killing off your client in the home. You want to kill off your clients in the home. You want to know, you want to show it, exit out, show them. When Bob dies, Mary, you're going to have a $3,000 a month income loss. You're going to have $800 a month. What are you going to do? Bob, do you want Mary to when you pass away, you've been together for 30 years. I'm assuming you don't want Mary to be left with $800 a month. I know you love her very much and you want to make sure that she's taken care of, right? This is why I know why I'm here now. We need to make sure that Mary's okay, right? We need to make sure that she's in a good position when something happens to you. You guys have spent, a majority of your life together. You have kids together. I know that she's your sweetheart. We want to make sure that when you pass away, when you don't come home, you can't come down the stairs and have a cup of coffee with her, that she's going to be okay, right? That's how you get people to move. You got to get comfortable with painting those pictures for people, knowing what their plan is. Perhaps a reverse mortgage option for them. We want to protect the equity in the home, right? The equity in the home is the most important thing. If they have a $300,000 mortgage and you can only protect $100,000, but they have $200,000 of equity, well, you're protecting, right? That payment is not for the coverage amount, it's for the coverage plus the equity in the home. We want to make sure that we talk about the importance of time, right? Time, giving your wife time to make decisions. Are your final expenses taken care of? Things like that. Options, again, so Mutual of Omaha Term Life Express is a really good option for your older, healthy clients. I do think that they don't have as good of their, the length of their coverage. So a lot of times I will go with an Americo for that, but they have they're a little bit more affordable when it comes to our older, healthy clients. As long as they're not over the age of 70, I will still offer the guaranteed advantage to them. Whatever we can do. Remember, these are healthy clients. Now we go into older, unhealthy clients. This is Bob, who had a heart attack last year. It's the same thing, except for what we're going to do is we want to build the importance of time. Time is the biggest thing for our unhealthy clients, our older, unhealthy clients who had a stroke, who had cancer, all the things where they don't qualify for any term coverage, but they have a $200,000 or $300,000 mortgage. And you go to those clients, you're like, oh my gosh, they have a $300,000 mortgage. He's 70 years old. He doesn't qualify for term. It's so expensive. These are my favorite clients, you guys. These are my favorite clients because they have their mortality is it's in their forefront. They have a wife or a significant other that they have spent their 30, a lot of our clients here, they've been married for a very long time. They have those values of being married for a long time and sticking with each other. They don't want to leave their spouse financially hurt. So what you can do is you build the value of a year or 2 years or 3 years or 6 months of mortgage payments to be able to give the wife access to the equity in the home. So that way she can make sure that she doesn't have to go from the crematory or from the funeral home and then directly have to go to a real estate office because she can't afford to stay in the home. And she's forced to sell the home when she has just buried her husband. I keep saying she because the way that was statistically, men are usually the ones, especially in the older community, the ones that die. We have more widows than we do as far as females than males. And that's what we see. You think about any of these retirement homes or these assisted living homes, they're majority of women. So I'm not saying that it's not, I mean, it's both. When I say her or she, I'm meaning it as a whole, okay? We wanna make sure that we protect and we're advocating for the spouse that's gonna be financially devastated when the other spouse passes away. And it's our obligation to bring that up. I will say things to, you know, Mary, when you die, Bob is losing $3,000 a month. Now I know you won't really care because you're going to be dead, but I know that you care about him, right? We want to make sure that he's okay. Do you want him to go live with your son? Do you want your house you guys have been in for 30 years to be taken over by the bank because he can't afford to make payments? These clients used to intimidate me, and I used to try to avoid those. I'd call like, oh boy, this guy, they're 70 or 60 or whatever. They're not, these are my favorite. So if we can understand the importance of time and protecting the equity, these clients need help. Okay, so get really comfortable with those. It's really easy to paint the picture for them and to paint what a $20,000 whole life policy will do for them. Okay. So again, key words for you guys, what my job is, what I specialize in. I'm a broker, right? I want to make sure this is most importantly affordable for you and your family. Things like, I'm assuming this is why you filled out the request. I know protecting your family is the #1 priority. You know, perfect. I completely understand what you're saying. I completely understand. Here's what the process is. This is what my role is. This is what we're doing. Well, I don't, you know, if they say, well, I want you to mail me the paperwork and then I'll look over and I'll decide. Perfect. I completely understand. So here's what the process is. This is what our steps are. You know, once you receive your policy, I'm always very assumptive. Once you receive your policy, it'll come in a big white envelope. It's going to have the Americo emblem on there. You're going to open it up. You give me a call. I'll come back out to you and go over it with you. Once we get an approval, right? Once we get an approval, I say things like, most people in your situation do this. Everybody in your situation does that. It's that herding mentality of everybody does this. Here are your options, right? I'm not going to say this is what you should do, right? These are your options. I'm not going to ask them, what do you want? What do you want? Do you want this? Do you want that? Do you want this? I'm not going to give them several options. I'm going to say, here are your options. Paint me a picture of what tomorrow looks like when Sally doesn't come down the stairs. What does that look like for you? You know, it's not if you die, but when you die. When you die, right? People get uncomfortable. I used to feel uncomfortable about it, but this is life. There's life, there's death, people die, and we are in the business of protecting and advocating families for when that person dies, okay? So we want to make sure that we're not avoiding it. This is not a laughing matter. When I ask a question and somebody laughs, I'm going to say, I'm not going to laugh, because I'm going to say, I understand what you're saying, but you know, unfortunately, I'm on the other side of this also, Mary. I deliver the death claims. I sit down and I help the families with that. You know, I am the person that your daughter's going to call when she finds my card and doesn't know what to do, and her mom died. You die unexpectedly because you have a heart attack. I want to make sure that she's okay. All right. So this close structure. All right. I know we're getting to our time. I'm going to go over a little bit. If you guys have to go, that's fine, but I'm going to keep going. Okay. The close structure. This is really, really important. So you've built the value, you've gone through everything with them. This is how you're going to structure your close. Okay. Because you're not the quote person, right? You're not the quote person to say, oh, thank you for your thank you. Okay, I'll think about it. What's there to think about? Like, what do we need to do? All right. So you can show 1 to 3 options. It depends on my client. Sometimes I'll top down them. Sometimes I'll give them 3 options. It depends upon what your style is. I ask them, if I give them 3 options, I'll show them once we've gone over what they want, what I know that they qualify for, they understand. So here's a couple options for you. We can go higher, we can go lower. I just want you to know what your options are so we get a good idea. And then I'll say, which one of these makes the most sense for you and your family? And I'm going to be quiet. I'm not going to say anything else. I'm just going to be silent. I'm going to sit there and let them hem and haw, and I'm not going to keep talking. I want them to pick it. Okay, whoever, somebody please mute. Then I'm going to reiterate, and they say, okay, this one. I say, okay, perfect. So we're going to put in place that 200,000. You feel like 200,000 is enough coverage for you, right? And they're going to say yes. And I say, you like that the 100,000 additional for accidental, right? And they say, yes, I do. And you like that there's the living benefits, the critical, the chronic, the terminal illness. You like that? Yes. Okay. And you feel comfortable with the $189 a month, correct? Yes. If it's in your budget. Yes. Perfect. I'm getting yeses along the way. I say, okay, perfect. So I grab my tablet, I open it up and say, okay, perfect. So go ahead and grab me your license. I know that you know your beneficiary information. You know your doctor, and whoever you bank through, make sure you grab your routing and account number, whether you have a check or online. So that way we make sure that we can put this through. And I always make sure that I say those things, but it's almost like I don't pause. I'm like, are you sure? I'm like, okay, perfect. Go ahead and grab me that banking. I just need your ID real quickly. I'm gonna do this quick. I told you I respect your time. Go ahead and, if you don't know your routing and account number, now would be the time while you're going and getting your ID. Go ahead and grab, whatever you need. And then I know you know your daughter's information, right? Perfect. Okay, great. Then what I do is, like, when they're walking away, sometimes I'll be like, you know what, is there any way could I get, because sometimes when I walk in, someone's like, would you like a glass of water, or do you want a coffee, or do you want this? And I always say no in a little while, and then when they get up and say, you know what, could I get that little glass of water? My mouth gets a little dry. I got that from Grady Polson. My mouth gets a little dry. Something to diffuse them from, like, oh my God, this is such a big commitment, right? So I also will ask them, when they get up, I'll be like, I noticed, say if you don't want to get a glass of water, because there's some houses that we go to, we really don't want to do that. So I'll say, oh my gosh, I noticed when I walked in that picture, where did you get that picture, Larry? As he's getting up to get his other stuff, because now I've distracted his mind of, like, oh, I'm giving this person all my information. What? Now he's thinking about the picture as he's grabbing it, right? I do not offer a later draft date. And this is something that is really, really important. And I see a lot of people do that. They want to be, this customer service, and they'll say, okay, what day of the month would you like your policy drafted? What I tell them is, okay, today's the 26th of the month, Bob. Your policy is going to be issued draft date today. After that, once we get the first policy issued, we can make a change. Do you have a certain day of the month you want me to change it to, or you can call me and we can change that draft date. But today, this is going to be our draft date. And then I just keep going. I don't pause. I don't say, they'll just be like, oh, okay. Or they say, well, can we have it on this day? Absolutely. The next one we can. Okay, this one will draft first. Now, if they keep pushing back, and if they have to, I will change it, but I never offer it. And I always try a couple times. One, they don't have protection. Two, if you choose your draft date, somebody's going to probably forget. They're going to forget about it. They're going to get upset, and they're going to cancel, because now you're not there to have that too much time has gone through, right? That emotion goes away. A lot of times then they're going to call you and say, you know what, I changed my mind, or, why did you draft me this? I don't know. And somebody else can come through. So you want to try not to draft your policies at a later draft date, okay? I always leave behind a policy summary, and I say, this is what your policy is. So whatever it is, there's some out there, you create your own, leave it on, whatever. I just say, this is what we put in place, and I go over it with them. So I say, as a reminder, this is what we put in place. So that way, when I leave here and your daughter asks you what you put in place, you're not going to forget, and you have it here. And if any questions come up, you just call me. I'll answer. Your phone number is going to be saved in my phone. So what I tell them is, so here's what your next expectation is, right? So once they've got the policy through, we've got it, we've submitted it, we signed it. They say, perfect. So what we're going to do is, your policy was submitted. They'll approve it in the next 24 to 48 hours, or they're going to come back and tell me no. They approve it, you're going to have your draft, so expect it. You'll see it from the company. It means your policy is effective and active. They're going to mail out your policy in a big white envelope, like I mentioned, it's going to have the little emblem on there. It'll come in about 7 to 10 days. Now with COVID and everything, it could be a little bit behind, but just know that your policy is effective and active. Once you get it, I'll come out to you. We can go over it. If we need to make any adjustments at all, we will do that. I'm going to make sure I call you to make sure that you, just in a couple days, if you have any questions, as well as in a couple weeks, just to make sure you got that policy. Oh, I've got something in my eye. Okay. Now, again, these are different word tracks. We did go through a lot of this already. If you were to qualify out of these options, which makes the most sense for you, this is going to be posted, so I'm not going to go through all these, but it's really this, wouldn't you agree? Can you see how that makes sense? We will make sure you don't have to worry about this anymore. I'm going to be one that's going to help you, your daughter, when you pass away. All those things that I already said, they're here. It's just word tracks for you to get comfortable saying out loud. Okay. This was mortgage protection / internet life. There's so many leads out there, you guys. I want you guys to get comfortable purchasing those leads, get comfortable dialing them. I know we're really into final expense, but understanding that mortgage or life is really not that complicated. There's a lot of people that need help, and having the confidence to buy those leads and to go out and just have the main structure. I hope this helped you guys. I hope you guys have a great day, and I appreciate you guys getting on here. Do you guys have any questions or any comments before I end this? I'm going to stop recording this, but there it is.
No, that